Ayo, what is up? My name is Ishan. You're probably busy, which is perfect because on this channel, we like to keep things short and sweet. No fluff, just quick and to the point. So in the next few minutes, we're going to be going over what to do with this current market crash. A lot of people have been asking me, should they buy, should they sell, should they even sell for a loss? There's a lot of confusion all around, and so this video, especially for beginners, is going to be really helpful because we're going to be going over the two most common mistakes that people make during these times. So as always, if you enjoy these short and value-packed videos, make sure to drop a quick sub and let's clock in. So the first and most common mistake is trying to catch a falling knife. No, not literally a falling knife. Please do not try that. What I mean by that is trying to buy in blindly without any technical or fundamentals backing up your buying. So why do people do this? Well, reason number one is simple. It's FOMO, plain and simple fear of missing out. Who wouldn't want to buy a stock down 10%? Obviously you want to be buying the dip, but buying blindly is where a lot of people get burned. So here are three things and situations when the market is falling to avoid so that you don't get burned and you can get in at the best price. First, you want to know the news as to what is going on. Why are stocks even falling? Because based on the situation, how much stocks fall could all be different. As an example, the pandemic. That's something super serious and deadly which caused a huge economic disaster. So something like that would cause a massive fall. But what we're experiencing right now is just a routine pullback from the market having soared to all-time highs, continuous month after month, pushing up higher and higher. So now that you've identified the news and the situation, you want to use plain and old simple technical analysis. You don't need to know anything crazy, just plain old simple support and resistance. Taking a look at the SPY, which is an ETF that tracks the S&P, we can clearly see that yesterday there was no support, like nowhere is there support. However, what happened today, we can see it found support in an area it's bounced multiple times and has had consolidation. Additionally, as you can see over here on the left, it had a gap to fill. You see this gap over here? So moment we got there, guess what happened? We bounced because people looked at the technicals and bought right where it was. So as just a regular profit taking, we know the pullback isn't going to be something massive and we can identify longer term supports to find the best entry points. The last tip for common mistake number one is buying in too fast. You want to be buying in slowly. Many people decide to go all in during these times, which could make you a lot of money. As an example, if you went all in March, but it's better safe than sorry because guess what? Supports break and stocks can continue heading lower. So stagger your buying based on how much cash you're looking to deploy and buy in stages. This will limit your risk and ensure that your investment is safe and you have enough cash at all times in case anything crazy happens. So second most common mistake is panicking, and this is pretty normal. When your account is down 10% when you wake up in the morning, you're gonna panic. It's never a good feeling, especially if you have a very high average on some stocks. So what a lot of people tend to do is to sell out even for a loss, but what you should really be doing is focusing on the long-term vision. If you just take a look at US equities over time, they've gone down, but they always recovered, especially good quality companies. As Warren Buffett says, never bet against the US economy. If the stocks you bought are leaders in their field and are changing the game, basically the companies of the future, then there's no reason to panic if you truly believe in them. I've personally made this mistake multiple times, which I really regret. I had shares of Microsoft in the low 100s, Apple in the low 200s pre-split, so you can really imagine how much I missed out on when I sold those companies thinking they had already gone too high at that point. That was because I wasn't focused on the long-term vision as I am now, and I missed out a lot. Sure, I bought in again as you could in the future, but would you rather be focused on the long-term future now or realize your mistake years from now or even months from now when the stock could potentially have already gone doubled? Tesla. Speaking of Tesla, a good example is Tesla stock, which in fact I made a video on why it could hit $1,000 again a few days ago. The long-term outlook for this company is massive and daily ups and downs will happen. All you gotta do is think with a long-term vision and focus on the future. Comment down below any mistakes you might have made which you want to share with others so that they don't repeat that and help each other out. I really want to hear what you guys have to say, so let me know down below and make sure you subscribe and liked drop a quick sub, and I'll see you guys next time. Take it easy. Clocking out for now. Peace.
Let's go.